I think the home office deduction is one of the most misunderstood areas of the entire Internal Revenue Code. Most taxpayers are afraid to take it because they fear it might trigger an audit. The reality is Congress has relaxed the rules. So if you're not taking it and you're entitled to it, you're leaving money on the table that is a legitimate tax deduction and can save you hundreds of dollars every year in taxes. Hi, my name is Jim Flouse. I'm an enrolled agent and tax coach. I'm enrolled by the IRS to practice in all 50 states. I work with taxpayers across the country, and I specialize in helping real estate agents. You may work with your sales manager or managing broker or even a real estate coach to maximize your commissions. As a tax coach, my job is to help you keep the commissions that you earn. First, let's talk about how you qualify to take the home office deduction. Basically, there's two requirements by the IRS code. The first is that the area that you use for your work at home must be used regularly and exclusively for business. Now what this basically means is you don't have to use an entire room, but the portion of a room or the portion of your home that you do use for business, you must use exclusively and regularly. Exclusively meaning it's only used for business, and regularly meaning you're doing it all year long and you're on average at least using it 10 to 12 hours a week. What this basically comes down to is if you're using your dining room table 364 days a year to operate your business, but on day number 365 you're using it to eat turkey for Thanksgiving, well, that doesn't qualify as home office space. Now, an area of the dining room that is used exclusively could qualify, or more typically any area of your home, whether it's a portion of a bedroom, an actual office space, or any area that you're using for storage or administration of your business. The second requirement to deduct home office expense is that the area you're using at home must be the principal place that you do administrative or managerial activities in your business. Now what that means is you may have an office at your broker's place of business. Maybe you work there a couple days a week, but you're working from home 4 or 5 days a week, and this is the place where you primarily are contacting customers, scheduling appointments, monitoring the multiple listing service, and so on. If that's the case, then home is really the principal place you're administering or managing your business, and so it does qualify. Here's some of the questions people ask me that give me an idea that maybe they don't understand the rules. One is they say, well, don't I have to meet clients at the business, at my home, to make it my principal place of business? Well, no, you do not have to meet with clients there as long as you're doing your principal administrative and managerial activity at home. That doesn't necessarily require the client be there. You can talk to them on the phone and so forth. Another question is, do I have to have a separate entrance to my office space in order to deduct it? No, there's nothing in the Internal Revenue Code or the State Department of Taxation codes that requires that you have a separate entrance for your office in order to claim it as an office in-home. That may be something your local city code or zoning laws would suggest, but has nothing to do with the taxes or claiming it on your tax return. So here's an example of exactly how you can claim the home office expense. You can take costs such as the utilities that you pay for the entire home, as well as rent or a portion of your mortgage interest and taxes. You can take insurance, you can take a homeowners association fees, you can take repairs, cleaning cost, homeowners warranty cost. All of these you can add up, and then you take what's called the business use percentage of that total. So what's the business use percentage? Well, I'll give you an example. Business use percentage basically just allocates what area you're using in the home for a business. So for example, if you're using a full room for your office, and let's say you have a 4-bedroom, 3-bath home with a living room, a dining room, a family room, and so on, kitchen, you may have 12 rooms total. Well, then you can take 1/12 or 8% of all the expenses that I previously listed. So think about it for a minute. If you have your rent and your utilities and all your other costs, and they're adding up to, let's say, $15,000 a year, which is not hard, then 8% of $15,000 comes up to a $1,250 tax deduction. That's powerful. That saves you hundreds of dollars. Now, you don't have to use the rooms. You could take it on a square footage basis. In other words, take the square footage of the area that you're using for your home office and then divide it by the total square footage of the home. In that case, that would be your then business use percentage. Multiply that percentage times all of the costs. Or there's a new method that the IRS is now using where you simply can take $5 times every square foot that you're using exclusively and regularly for your office up to 300 square feet. So if you're using an area, let's say 300 square feet, $5 per square foot, that's a $1,500 tax deduction. That's powerful. Now just a couple notes of caution here. Number one, some accountants and some taxpayers advocate actually also depreciating your home to the extent that it's used for business. Now depreciation is basically the wear and tear of a home over the years. So if you have a $250,000 home and you're going to be living in it 30 years, then you divide $250,000 by 30 years, and that comes up to several $1,000s a year of depreciation. And then you would take the business use of that. So that can be a nice depreciation deduction every year. I don't recommend it, however, and here's why. You're eventually going to recapture that depreciation expense should you sell the home. And you know what? That's going to be a tax hit down the road. I just don't think it's worth it. Another cautionary note is this. You can only deduct your home office up to the extent of whatever your net income is. So you don't have a lot of net income, you may not be able to deduct the full amount of the office and home expense. The good news is, if you had a loss, for example, in your business, you can carry forward the home office deduction into a future year and apply it against future year profits. So, that said, office and home deduction can be a powerful deduction. If you can deduct $1,000 or $1,500, in my mind, if you've got good records, that's well worth the effort. Why leave that money on the table, right? I'm Jim Flouse, rhymes with house. If you sell houses, don't make the big mistakes that real estate agents make. There's 10 big mistakes that cost them thousands. We have outlined those in a free report that you can download by clicking the link below. Click the link and you can download our free report. Also, if you like this video, please give a thumbs up, share it with other agents, and finally, please subscribe to our YouTube channel. That way you'll stay updated every time we have a new video or we bring in some new insight as a result of the Tax Cut Act of 2017. That's it for this time. Until next time, so long.